Good afternoon, everyone. Welcome to our webcast on short verticals. I'm happy to see you here today. Hope you're ready to dig into some fun things. Now, how many of you look for perfection for your entry point? I mean, just absolute perfection, not just picky, but really perfection. I want you to answer me in the chat. See if we have any perfectionists out there. We're going to talk about that a little bit today. But I'm happy to see you here. We've got some of the usual suspects, as we call you sometimes. So good afternoon here to Paul, Sandeep, Curtis, Kathy, Bush, Robert, Will, Scott, Randy, Amy, Mike, John, Kevin. So happy that so many of you are here for that today. We are also joined in the chat by Brent Morse. Brent's a great friend and fellow coach and very knowledgeable in short verticals and pretty much any strategy we want to throw at him. But if you have questions, go ahead, chat those in. I'll try to get your questions. Brent will try to respond as well if there's some things I can't get to. Now, if you're listening to this on the recording, and I know there are lots of you that do, when you have a question, go ahead and put it in the comments section on YouTube, because I go back and review those every day and make sure that you get your question answered quickly as well. All right, let's go through our disclosures, and then we will jump into our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for information and education. Don't consider it a recommendation of any sort. We will be using the Paper Money software application of Thinkorswim. This is what you download to your computer. It's the most robust version of the software. Investing involves risk, including the loss of principals. As appropriate, we'll talk about our Delta, Gamma, Vega, Theta. Past performance of any security or strategy does not guarantee future results or success. All right, now I'm going to look here and see how many of you responded to me to say, yeah, I look for perfection, or maybe I don't look for perfection. Okay, looks like 50-50, maybe say again says maybe 50 of the time you do, 50 of the time, maybe you're not so conscious of that. Well, we're going to talk about that, especially as it relates to new trade setups and positions that we're monitoring right now. Now, do want to invite you, if you can get to any of these places in the next couple of months, please do it. You will love me, you will love Brent forever for encouraging you to go. We've got Scottsdale and Detroit, which are option strategies and technical analysis. Technical analysis is usually Friday, and then the options on Saturday. And then the Chicago event is advanced options. So those of you that maybe have been waiting a little bit of time to have one of those come up, I think we only did one of them last year. Chicago might be your place to go. All right, so I want to encourage you to do that. We always want to talk a little bit about short verticals. Now, I'm going to assume that you know what a short vertical is. And you've been through, say, Barb's classes that she had been teaching, and now I think it's Cameron May, about getting started with options to learn some of the basic option strategies of which short verticals is a part. So I'm going to make some assumptions that you know some things, but I certainly don't want anybody to be lost. Okay, so as you have a question, speak up and let's act and go ahead and ask it. And then we are going to spend a little bit of time on trade management techniques. You know, I think that's probably one of the most important aspects of a trade is, okay, I figured out how to get in. Now, how do I manage it? Maybe it's not going the way I thought it was going to be, right? What do we do to address that? And of course, we're going to do some new example trades here as well. Bill's wondering, what is perfection? We'll talk about that, Bill. It could be different to everybody, right? But just the idea that you yourself think, oh, this has to be perfect or I'm not going near it. Okay, that's the idea. All right, well, let's jump out to our Thinkorswim here. And let's take a look. All right. I think the markets are still holding on to a little bit of a gain. Let's maybe zoom in here. This is the SPX. Yeah, it looks like it is up ever so slightly, but I think the market's been like just mildly bullish, right? Not incredibly so. There's our SPX today, but we did hit another all-time high, right? The SPX has been making them. So that was on January 24th. There was a high. Let's look at the NDX. And our NDX, it looks like it's up here today, about 0.2%. It has a little bit of, I mean, it's not that far off its all-time highs here. If I put my mouse there, that 133 area. Okay, it's getting close to that. The Dow Jones, I think, has been hanging in there today as well. Oops, let's get the right ticker symbol in here. Looks like maybe it is down ever so slightly now, maybe about 0.4%. But overall, we're seeing a pretty bullish environment despite the little whipsaws that we've had the last couple of Mondays, right? The last couple of Mondays have kind of thrown the market a curveball, and we had some gapping down. Something's recovering pretty quickly. Something's not even getting impacted. But overall, the overall market was impacted by it for sure. Now, let's do this. I want to look at some of our trades that we finished up, as well as some trades that we need to make some decisions on. Okay, I want to show you a couple of ones that we did a little bit earlier that have hit their targets finally. Okay, so we're going to start out with MCHP. Now, I was not here last week. I had to be gone. And Mike Fairborn substituted for me, so you didn't get that update. But let's kind of refresh what was happening the last time we got together on this trade. This is our date of entry. And, at the time it looked like, it was maybe bouncing off some resistance here. All right, was that perfect? Well, in hindsight, maybe not so much, because then the stock went up for a couple of days, went down, kind of doodled around, several times got up higher than where we got into the trade initially. All right, the last time we were together, I said, does it make sense to do a change of polarity on this trade, meaning buy back the short put or the short call, and then maybe turn it into basically just buying that leg back and letting the long call run and try to make up some money for it? It didn't really qualify for that. So we decided we're just going to be patient. Sure enough, it had a nice big move. And on this day here, it went ahead and it took us out. I think I had a setup there to exit the trade when we had 70% of the max gain. So certainly not all of it, but the big chunk that we're looking for. So in this case, we ended up here. Get the right letter in there. I maybe need to give it a little bit more time than 30 days. Let's go 40 days. There we go. All right, so our initial credit was 60 cents. We bought it back for 15. We were hoping we would have been happy to get out at 18. We got filled at a little bit nicer price. All right, so our net there is basically $45 per contract, of which we had 5. And so that gave us a nice little gain of about $225. So not huge, but we didn't have a huge number of contracts either. Okay, next up, let's look at HIMX. This was a bullish stock. Okay, we did a short put vertical on this. We can see this is the day we got in. Well, was it perfect? Well, it was okay, right? Looked like maybe it was breaking above some resistance here. I must not have that line on there anymore, but it looked like maybe it was doing that. Okay, we're certainly following the trend. And we were in this trade for 5 days. Boom, 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 boom. It hit our target. Sweet. We love that. All right. Did we leave some money on the table? Well, yeah, we probably did in this case. All right. But we determined up front, we're not going to say we've got to get every little last ounce out of it. Okay. We're saying we get a big chunk, man, we're going to just lock in the gains and move on. This particular one, we had 6 contracts on, took it 5 days, I should say, and about a $49 gain per contract. So that came out to $294. All right. So not too bad. Another one. And then I'm going to ask you if you're noticing a pattern here. Okay. So I'll give you the heads up on my question that I'm going to ask you. All right. Netflix, man, it looked like it broke out of resistance here. And then it looks like it was bouncing off support about there the day that we got in. Then what did it do? Did it race up like we were hoping and expecting it would do? It actually didn't. What did it do? Went sideways. It went dinking along here for a little bit until I think this one was 9 days out. Finally, after 9 days, had a little bit more lift than what it had had in the previous days, and just enough, again, to get our chunk out of there. This time on Netflix, we only had one contract. I'm not sure why we only did one contract there. All right, but we brought in a credit of 225. We were intending to buy it back, but got to around 67 cents. We got filled it slightly better than that at 60 cents. Okay, now we only did one contract here, so the gain on the trade was only about $1.60 or 165 because we only had one contract. Now, if you were going to look for a theme about what might all these three trades have in common, what would that be? I'm looking to see if you noticed maybe any pattern, or noticed anything maybe that why these three trades went well for us, even though maybe our entry was not perfect. I mean, it was picky. We were looking for a bounce, or in this case, we got in on a breakout. Okay. But it might not have been ideal for everybody. Might have not met the level of perfection. Paul says green is green. You're absolutely right, Paul. You make that money. Green is green, certainly. Looks like you guys are trying to help each other out here, which I appreciate. Alexa says, once execute, where can we see what the stop or the limit order value was? Basically, what did you put in for the trade to execute? I've got two sections open here. I have my trade history, which are the actual prices and dates of when it was filled. And then this section right here is our order history. And so we can see what the orders were, what we put them in for. So for example, on this one, when we got a big chunk of our credit out of it, we said we'll go buy it back at 67 cents and exit and remove our obligation there and close down the trade and lock in the profits. Okay. And so we can see here, okay, it was a limit order for that 67 cents. I had put it in till good till canceled. If you do it in the condition, this one doesn't have a condition on it, but if you have put it in the order conditions, you can click on this little gear that appears there, and then you can see what you had set up there. None of the trades we're looking at right now actually have that. Okay, but hopefully that does make sense. Now, in terms of pattern, what we're noticing here, well, Paul says, short vertical is good for small accounts. It can be, right? Especially how we're setting them up here, where we're, bringing in a little credit, and you could do this trade with one contract. You could do it with 10 contracts, just depending on your account size. Absolutely. A slight profit is better than a loss, David says. Oh, no, actually, that was Mike. David says, all winners and not big moves. Yeah, none of those were big moves. Good pick up there, David. Let's see, Barb says, nickels and dimes make quarters. Absolutely, right? The accumulation. Now, again, none of these have been home run hits, and we didn't intend for them to be either. We just intended for them to either go up like we thought they might do because they had a bullish entry signal, or just go flat like this one did, and just not cross below our not close below our short strike, which in this case on Netflix, our short leg here was the 940. Okay, so down here, where is 940? It's a little bit below where that support area is, around 948. Yeah, we just want it to stay above there. And if it's further away from it, great. All right. And did time decay work in our favor? Yeah, these absolutely were time decay working in our favor kind of trades. Okay. So my point here is that we don't have to be perfect. It doesn't have to do exactly what we wish it would do. It does not have to continue up at a real steep angle, real steep pace. If it does, great. Then we can hopefully lock in some the credits on that trade more quickly than just waiting for time to decay. But sometimes these are trades of patience. When we started doing some trades in January, we were going out to February contracts. And so that was giving us about 6 weeks. And so we did have to exercise a little bit of patience on that. Now, there's a couple of other trades we need to do something with. All right. Our DXCM, we're just going to let that one continue to work. Let me look here. No, I maybe didn't make any notes about it. We've got 15 days. Actually, all three of these will expire that same day, that February 21st. Okay. We're up on the trade. It's down a little bit right now, but it's staying well above 80. Okay. On its strike price. Where is its 80? Well, it's clear down there. We got in on a nice breakout move. This one actually has moved fairly nice for us. It's just that we had so much time that when we got into the trade, we kind of got in at the long window of the time versus the short end of that 20 to 40 day range that a lot of traders like to look for. And so it does take a little bit of time for that to decay, but the stock is doing great. We're happy with it. Okay, it just hasn't met our criteria yet to get out of the trade. The other one here I want to show you, this one's being kind of interesting, and this is a great lesson. RUM. We had a trade, we brought in a credit for 35 cents. And this is saying we could go buy it back for a nickel. Okay, now it's using the midpoint price between the bid and the max, or between the bid and the ask on both strike prices. Okay, so when we come up here to our working orders and we look at RUM, you know, it's saying, hey, it should go for 5 cents. Well, we had in here our original amount, which was 9 cents. It just wasn't taking it, even though it was down here of 5 cents. So I moved it. I said, okay, fine, let's go to 11 cents. And it still isn't taking. Now I was like, well, maybe the open interest is dried up. Okay, so come out here. We'll look at the open interest in these contracts. All right, both of them are way out of the money. We still have about what? 339 contracts here, 409 contracts here. So it's not like we're working with a real small pool, but it's just not executing for us. So one of two things could happen. Number one, we could say, fine, if you're going to be stubborn with us, we'll be stubborn with you, although the market doesn't care. Let's get the right stock up here. There we go. And it stayed above our 11 strike price. I do think this is where sometimes smaller dollar stocks maybe have a little bit of a disadvantage because sometimes you don't get the percentage width between the strike prices that might be more ideal, like you can in a price of a stock that's, say, $60 or higher. Okay, but it's doing exactly what we would hoped it would do. It's just not making it. So something that I hate worse, well, one thing I'll say it this way, don't like, is having sitting in a profitable trade where you want to lock in your gains and you say, well, fine, I'll ignore it. I'll just let it expire worthless. And then a piece of bad news comes out, and what happens? Boom, all of a sudden you're taking a max loss when you're in a situation of being really profitable. So that's why I was trying to kind of work it here, see if the market would cooperate a little bit, because I'd rather lock in a partial gain than have some news come out, be stuck at a max loss. And I'll tell you from experience, you only have to have that happen to you once or twice, and you'll learn your lesson. Okay, I have learned my lesson many years ago. So we're gonna adjust this, just see if the market will work with us. We'll see if it'll go for 13 cents. Again, still a chunk of the max gain that we were looking for. And we'll see if it'll cooperate with us. We'll see if that'll come up. Any questions on that particular one? Because sometimes that can be tricky. The last one is, this IREN. Okay. This particular one actually hasn't been going in our favor the whole time. And let's bring it up. I need to get my little links back in there so that I can get to the stock quicker than typing it. All right. Now, this one we've only been in for a couple of weeks. Had been mostly a bullish trend, and it looked like it was bouncing off that trend on the day that we got in 2 weeks ago. Okay, it went up a little bit, and then what did it do? Well, it pulled back and it went below, and it had, what, 5 or 6, 7 days here below our short strike price. Now, in the real world, it's possible that we could have been assigned, well, you can be assigned any time. It's more likely once the strike price is in the money as opposed to out of the money, okay? So it's possible if this were in a real account, we could have been assigned. Now, we're still a ways out from expiration date, and so things don't expire just because they go below the strike price. They're more likely to as you get closer to options expiration. But we had time to be patient with it, okay? So being patient, here we've been going up. It has earnings here on the 12th, which is next Wednesday, and we want to be out of it before then. So if we get a little cooperation and it comes up here, even if it doesn't come all the way up to where our exit point is, we'll go ahead and get it out of the trade, okay? Short verticals allow you the luxury to be wrong a little bit, okay, to not have the trade go perfect, all right? And so that's what's happening on this trade. And instead of, this day, somebody could have panicked. That was the first Monday when we had now I forgot the name of it, WeSeek app, possibly, from China, whatever, everybody getting all excited about it. It took a big dip that day, but then pretty much it's just been clawing its way back up. Okay. Frankie says, I have this one and you haven't been assigned. Interesting. Okay, so you're trading along with us. Hopefully that's in your paper account. That's perfect. Some of you have had that lesson as well. Mike says, yes, I have had lots of pain. Yeah, you recognize that. You don't have to do that a lot of times. All right, so that is the latest on our trades that did well, that we learned from. They weren't perfect, but they still worked out in our favor. So we are going to continue. I know what that is. I'm just going to hide that. Let's come over to our charts. Now, when we're looking for entries on stocks, I think it's good to be picky. Okay, it's good to have some rules, like I want to buy at support, or I want to buy a bounce off support, or a hold, or breaking out of a flag pattern. All those things are great. Sometimes great, but they just don't materialize. And the fact it doesn't do what you think it was going to do doesn't mean you're a bad trader, doesn't mean you don't make good decisions, just means this stock didn't follow through with what we thought it was going to do. So we're going to take a look here, and we're actually going to use some different time frames than what we have been using here. We're going to take a look at Google. Now, they announced their earnings this week, a couple days ago. It was a little disappointing to the market. What did it do? It dropped through its diagonal support, which it had been really holding nicely to. Went right below it, but then it just kind of stopped around this 188 area that had been a previous bounce point. Okay, now this may be a little bit aggressive for some of you because it's formed a lower low. But if this stock, say it just stayed above its support level at 188, then we'd maybe just sell a strike price lower than where that support area is. Okay, so again, this might be a little aggressive for some of you. This is the idea of selling a short put vertical at support instead of waiting for the confirmation that it's bouncing. Okay, difference there. Time frame on this one, Google has lots of weeklies, and this is a stock that is just super liquid, right? 18 million shares traded. And so we're going to be using here, we're going to use the March 7 expiration date. So one of the weeklies. It's kind of right smack middle in that 20 to 40 day time frame a lot of traders like to look for. And so on this, let's see, what strikes did I decide on here? We had a couple of choices. Let's go, I think it was 185. Let's see where that's sitting right now. 185, 180, sitting at about a 29 delta. We like to look for high 20s, low 30s, typically, for a higher probability trade. And right now, this is saying on this 185, the probability of it expiring out of the money as of right now is about 68%. So that's starting out in a pretty decent position. So then the next question would be, well, is it going to make, let's sell the vertical here and determine does it give us a good enough credit that we feel good about doing it? Okay. And it's a little bit lower than it was initially when I looked at this. We'll go ahead anyway. All right. I'm going to lock this so that we can just have a fixed number in here. And, oh, I lost a calculator. We better go get one. Mike says, I don't like to close legs individually, but you've done it. Many times you are keeping the legs together. Many times you certainly are. Yeah, Kevin says, on Rumble, would it help to close the legs individually? Okay, so that's where that comment came from. That is a possibility, okay? If we go back here for just a moment to the working orders on RUM, it might help, but it might not, okay? That might be something I can go back and look at. I won't take time to do it right here, but that might be a possibility. The one that's further out of the money, I think we're just not going to get anything for it. Okay, they just want to offer 0 at the bid price, even though the ask price, I think, is either at 5 or 10 cents right now. Okay, so looking at Google, let's run some numbers, okay? We've got a $5 wide spread here. So we're going to take our max theoretical gain of $1.15. We're going to divide that by the max theoretical loss, which should be what, 3.85? It's about a 29% return. Okay, for some of you, you're going to go, great, I like it, 29% return, and it already is starting out at a 68% probability. You might like that. Some of you, I know, have the rule you want to get at least a percentage for every day that's left in the trade. That's right, smack at it, isn't it? At 29%. All right, we're going to go ahead, we're going to do this trade. Now in here, and I haven't been really good at focusing on this, we can risk $1,500 in our account. That's $150,000 that we have to work with for these trades, okay? So we're going to start position sizing a little bit more regularly to account for that risk, all right? So how would we do this particular trade? If we have the possibility of losing $385 per contract, if everything in the world went wrong, we hit our max loss, okay, we want to make sure we're good with that. So $1,500 divided by, what did we say, 385? We could do, I guess, 3 contracts here, not quite 4. Okay, so we'll do 3. And then we're going to do what we have been doing, which is putting in an order to exit if we get a good chunk of the profit. We're not going to hold out for everything in the tube like the toothpaste, all right? But we're going to look for a chunk. So we'll do a first trigger sequential. Let's create our opposite order here. And then when we get back that chunk, could be 70%, 75, 80, 85, could be 60, could be 50. Right? You get to decide that. Okay, I would say something over than 50 for me would be at a point where I would want to lock in. If I only got 40% of it, probably not too excited about that. Okay, so let's take our 115, multiply that by 0.3, because when we get 70%, only 30% is left. So we're going to go buy it back we're going to put it in here for 34 cents. I'm going to make it good till canceled. And all the ones we're looking at today are bullish ones, so we will put this in our bullish basket here of short verticals. All right. Just checking my comments here to see if there's something I need to snag. Okay, so yeah, Mike, a little bit more commentary about closing the legs out separately. That you have a friend that likes to do it, and you're like, no, buddy, that's not always the best idea. Yeah. All right, next up, a little stock you've probably heard about, FLX, Netflix. Well, it had a great earnings, right? It had that nice pop, and we just did a trade on it, right? And it got us out of the trade here. Well, what is it doing today and yesterday? It's kind of moving beyond that, kind of that short-term ceiling, that short-term resistance. Looks like it's wanting to move on from it. Okay, Could some people use that as an entry? Yeah, they could say short-term breakout. Our MACD yesterday was a little bit more positive as far as momentum goes. Today it's a kind of a little bit sideways. When I was looking at it earlier, it wasn't down at all, but we're still going to run with it. Okay, is it good? Maybe an entry some people might like. Yes. Is it the most perfect entry? I'm going to say it's not probably the most perfect entry, although for some people it would meet their criteria. Okay, what would make it perfect? Well, some people might have said the day that we actually got out of the trade might have been the perfect day to get in, because that's when it had its first bigger move, from this consolidation area, right? Technical analysis is in the eyes of the beholder. All right, Netflix. We're going to use the February 28 contracts. These are weeklies. Fortunately, Netflix does nice trading. And I do go pick around in these to see where there's some decent open interest. And I did want to use those today for a couple of trades, just so that you know that, yeah, sometimes we can use weeklies. Many times we just have to go to the monthly, and that's just fine. But let's see what we've got going on here. So we're going to look, we've got several deltas in the 30s and high 20s here. What I was going to focus on, we'll see if this still looks pretty good, was going to be 980, where we have 481 open interest contracts. That would be our short leg, and then our long leg would spread out to this 970. And I'm going to spread it out a little bit more because I want to be where the contracts are. Okay, you want your contracts to be just a little small portion of what the open interest is. Okay, so that's what we're going to do. We're going to say, let's look at this and do 980, and we're going to change this to 970. And that's actually even juicier than what I was looking at earlier. Not about the same. It's a little juicier. That's all right. Okay. It would be a $280 credit per contract that we do here. Spreads a little bit wider. Okay. So it's $10, not $5. All right. So $10 minus 2.8 is going to give us 720, which is our theoretical max loss. Okay. So let's go risking $1,500. Divide that by our max loss of 720 per contract. Actually, so. And we can do 2 contracts. Now, some of you might say not want to do 2 contracts, and that's fine. It seems like we should be able to do more. I guess not. I guess it just kind of just barely actually gave us the 2 contracts here. So we'll follow our position sizing. We're not going to go astray from it. We're just going to be very methodical. Same thing every time. So here, let's do our 2 contracts. We'll do a first trigger sequential. We'll create an opposite order, right, to go remove the obligation if we get a big chunk. Okay, so 280. Let's this time, let's go for 75%. Okay, so we'll multiply it by 0.25 and say, fine, you get down to 70 cents here. We would love to buy it back. Okay, make it good till canceled. And we'll hit confirm, send to our bullish short vertical bucket. All right, excellent. We just got filled on that. All right, next up. Next up, actually, we're going to take a little detour from what we're doing right now. And I want to point a couple of things out to you. First thing is, I kind of was nudging you to go look for workshops, right? To go and join in. I'm going to show you how to register for the workshop now. Okay. Learn Schwab Coaching. Come down here to the in-person events. View the calendar. And this is doing it in a list. If you wanted to do it out monthly, you could do that, or tile it, whatever you like. We'll just keep the list. Okay. This is where they all are. And when it says learn more, that allows you to go in and register for the workshop. Okay. Not all of them have the ability to register for, but a big chunk of them do. Okay. So up through May 31st. So basically the first 5 months of the year, yeah, they're all sitting out there. So that's how you can, if you have, that's how you can register. And if you have any inclination to do it, don't be a procrastinator, okay? Because they fill up. And we've been getting in situations where our capacity is being really, really stretched, okay? And so if you like really want to go, which I'm encouraging you to really want to go, you want to do that. Now, the other thing I want you to do is make sure you're a subscriber to our Trader Talks. Just click on that little icon in the bottom right-hand corner. That's the blue YouTube logo, so that you can subscribe to our Trader Talks. Now, I'm just going to go ahead and refresh this. Why? Because it makes it so much easier to find our content. You can come in here and you can say, oh, well, what's coming up? Well, after our class, we will have Getting Started with Stock Investing. Great. Or whatever class that maybe you're trying to track, you can also come in here. You can say, notify me, tell me when you're almost ready to teach that class, send me a notice so I don't forget. Or probably where a lot of people will go is to these playlists, right? If you wanted to go back and look at, say, our previous short verticals classes that we've had, yeah, you go to the playlist, you can go pull each of those up in order. I also like to post them in the YouTube comments so that if you want to go there specifically, you can go there to listen to the class as well. So just kind of depending on, where it's more, I don't know, comfortable, convenient for you. Okay, but I want to encourage you to do that. No longer be a procrastinator. And the other thing it does when you see our videos, it allows the YouTube algorithm to kind of do some preferencing so that people looking for the same kind of information get led to our webcasts as well. So you might be doing a big old favor for somebody else by doing that. All right. One more stock you probably heard of recently. PLTR, Palantir. Now this stock, look at this. This is just a 6-month chart, I think, that I have up here. Yep. Its low point was 25.57 6 months ago. Man, this stock has just been on a giant cruise, hasn't it? Yeah, they had earnings a couple days ago and gapped way up here. I mean, it was a pretty big gap. Honestly, I was expecting it to pull back a little bit, okay? Many times the bottom of a gap, like we see here, will act as support. And maybe I'll drill in here a little bit closer. Let's see, the low here was 151. So we've got basically some short-term support right here at 100. And the last couple of days, it's just kind of come down to it as though it's saying, yeah, you're my support. I'm going to honor you. I'm going to bounce off of you. So today, what do we have? We have just this nice little bounce off that support area. Some people like that for an entry. If it were down even lower, just kind of sitting here as support, there might be other people that like that as well, right? You get to choose how picky you're going to be and how perfect of an entry you're looking for, okay? The one thing I would say is if you're looking for perfection, sometimes we don't really get perfection. And you keep yourself out of a lot of trades that maybe otherwise would have been just fine, okay? So let's go to Palantir. Do you think they have a lot of trading activity? Well, 90 million shares today. Yeah, they've got a lot of trading activity. I was just going to look down, and that's just pretty much average for these guys, okay? Broke through, that big gap day on lots and lots of volume. That lets us know institutions and others are there. And we have weeklies, so we have some choices that we can choose from. We are going to use the February 28th again, okay? We're going to go over to the short put, or this put side, so we could do another short put vertical. Want you to notice there's lots of contracts out here. Now, if there was like 35 and 21 and 17 and 20, I wouldn't be going here. I would go, fine, that's not very liquid. Let's go out to the monthly expiration. But it's actually decent liquidity here. And we've got a lot of choices. Now, this one I played around with a little bit because it's just a $1 wide strike, and which can be nice for those of you that are really working with smaller accounts and you're like, I can just do three contracts or 4 contracts or whatever it is, okay? We are going to look at here. Let's see if this still looks good. If not, I reserve the right to change my mind. We're going to do a 99, which I want you to notice here is a 26 delta. So that's kind of low in the delta range. Let's look and see what kind of a credit it's giving us. Now, and I also want to point out, look at that implied volatility in the options. What does that mean? It means they're more expensive. And that means typically juicier premium if you are interested in being a seller, which of course in our class we are. Well, 39, 38. Oh, it's the wrong way. It went a buy instead of a sell. Let's go sell vertical. There we go. And it's about 36 cents. I'm just going to lock it in. Now, do you know just off the top of your head if that's going to be a reasonable return or not? There might be some of you that are like math wizards. You're like, oh yeah, it's going to be 40% or whatever it's going to be when we work it out. But it's going to be healthy. Okay. So in this case, just a dollar wide strike. If we wanted to spread it out more, we could. What's the advantage of that? The advantage of that is that maybe you don't have to buy as many contracts. Therefore, you don't have as much of a commission for the contracts, right? So that can be an advantage. Sometimes by doing that, though, your hedge leg is further away, right? Your protection leg is further away by an extra dollar. So there's a trade-off. You just want to be aware of that. So 36 cents, if we take that and divide that by what? That's going to be 67. I hope that's right. If my math's wrong, tell me. Okay, I think it's 67. I think that adds up to 100. That's a 53% return. Okay, 53% return. And already it's starting out at a 68% probability of success, meaning to expire out of the money. All right. Now, some of you might see that and go, well, I don't need a 50, whatever that turned out to be, 53% return. I'm satisfied at 40 or I'm satisfied at 30. And you could come out here and there's enough liquidity out here in a lot of these strike prices, you might decide to go further out of the money. We're not going to. Okay. We're going to stick where we are. So we're going to be looking for a higher return here. And so let's see, $1,500 divided by our max theoretical list of $67 per contract, 22 contracts. Whoa. Is that too many in this kind of sea? I like that we've got some volume activity here today, and that's going to bolster the open interest contracts. If you weren't really that comfortable with doing 22, you might back off of it. So let's just do 15. Okay, so we'll do 15. And what are we going to do? The same thing we keep doing. We're going to put in our opposite order to get out of the trade, get, lock in profitability and move on to a new trade. So again, let's go with 70% again. So let's say 30 times 0.36. It's going to say go buy it back at 10 cents. We'll go buy it back at 10 cents. We hope that's where it goes. Sometimes people will ask about stop losses. And generally, people that are doing a hedged position by selling the credit and then buying the leg, that's your hedge leg, kind of think, just position size it to a max loss because I'm already hedging in this position and it's already a high probability trade. All right. Now, I think I was able to keep up with your questions here. I think you kept Brent a little busy here as well. So appreciate Brent helping us out here in the chat. And I'm just going to scan and see if there's anything that I accidentally overlooked that I need to answer. But I'm thinking we're okay. Paul has a nifty spreadsheet he has created, it looks like. Excellent. Good job. Yeah, you're welcome to make whatever spreadsheet you want or download this. With this webcast, there is a trading journal. If you go into the calendar and you'll see under resources, you can download that calendar to Excel. I haven't tested it on anything else. All right, so today, we wrapped up and analyzed several ongoing trades and saw we didn't have to have perfection on every piece of the trade in order for them to work out for us, did we? Yeah, we didn't. And so I'm going to just encourage you, practice paper trading until you get comfortable with short verticals, okay? It's a strategy that a lot of folks like to take advantage of. because you don't have to be perfect, and every little trade does not have to just do exactly, a bullish trade go straight up, right? And still can work out as a positive trade for you. All right. So please do that. Follow Brent and I on X. He's Brent Moores CS. I'm Connie Hill CS, and we post educational content out there every day. All right, next week we'll follow up on these trades. And then for those of you that kind of dipping your toe in the water, go ahead and join Kevin's class coming up next of getting started with stock investing. We'll see you next week. Bye-bye.